All right. We've made it this far. There's been so many terrific and often sort of high-level conversations all day. What we wanted to do to wrap it up was start to bring it just back down to brass tacks. AI is here. AI is happening now. It's in the workplace. It's being deployed in companies. And my two terrific guests are going to help us understand some of the ways that it's actually being used on the front lines right now. So Adena, as CEO of Nasdaq, keeping the financial system, the markets running smoothly and without fraud is of paramount importance. Can you talk about some of the ways in which Nasdaq is currently, right now, using AI and machine learning to help make sure that there's system integrity?
Yeah, sure. Well, I think the first thing is just to set the stage for 1 second to talk about what Nasdaq is today versus what most people think of us. So we are, obviously, a preeminent U.S. equities market, but a lot of the technology we use to run our own markets, we now sell to 110 other markets around the world. And in particular, the technology that you're discussing, which is our surveillance technology, we actually provide to 150 broker-dealers, 50 exchanges, and 18 regulators. So they all use the same platform that we've built to manage and look for market manipulation, insider trading, and other nefarious behaviors in the markets that they operate. So we have basically 180 markets that we bring into the data stream, all of the, obviously, the broker-dealer data that they bring in, and we try to find and root out fraud and bad behavior. So we are now using AI and machine learning to make all the algorithms smarter, to find new outlier behavior that may not have been identified yet. So look for those outliers in ways that a human, with the mountains of data we're talking about, just would never be able to find. And then also to narrow down false positives, make it so that it's much more efficient to use the platform in terms of actually looking at these certain specific situations and then starting the casework on them. So it's a great technology. It's a wonderful tool. It allows you to drill down into literally microseconds, and we actually go down to nanosecond timestamps now so that you can look at really, really granular information and behaviors and try to find those things that are not right in the market. And AI is obviously going to be a critical element of how we take that forward.
Terrific. Deepa, Senior Managing Partner at the SoftBank Vision Fund. You have investments in everything from WeWork to Boston Dynamics and so many others. Can you give us some examples of the way in which some of your portfolio companies are starting to use AI and machine learning to really affect some of the results?
Yeah, absolutely. And you know, AI is a big theme for us as a fund and as a group. And we believe that AI is like air. Every company has to be using it. Several of our companies are using it to great benefit, both for themselves as well as their clients. So probably some representative examples. Let's start with the most mundane, cement manufacturing. One of our companies, Batum, that is an AI infrastructure company, is working with one of the largest cement manufacturers in the world. And if you know anything about cement manufacturing, power consumption is about 20 to 40% of their OpEx, depending on which part of the world you live in and how easily you can access that power. And in some of the early work, within like a few weeks of doing this work, Batum was able to shave their power consumption by 2 to 4%. And these are early results. We hope as the systems get deployed, that get even more. And that's a lot of money. Take it all the way to the a different end of the spectrum. We have a company, Guardant Health, which is listed on Nasdaq, and their whole motto is to beat cancer with data and AI. And they do cancer detection using just blood and not doing solid tumor biopsies, which has revolutionized the way you do cancer treatment and cancer care.
Terrific, terrific. Now there's a flip side to all this, of course, which is that for as much as there may be benefit and cost savings when it comes to power, there's also, as we've talked about this week, the risk of real job losses. Adena, in the financial services sector, this seems especially acute. This is an industry where there are still thousands and thousands of humans at dozens and dozens of companies doing relatively mundane labor, things like loan origination and background checks and know your client work. When you see some of your partner companies starting to deploy AI machine learning, is there a real risk that some of those jobs are going to be left by the wayside?
Yeah, I think there's no doubt that the financial industry is looking at AI in 3 components. One is the defensive work, like the surveillance work I just talked about. The second is in efficiency. So efficiency, of course, usually means being able to get more scalability to your processes, which usually means making so you could do more with at least the same number of people, if not fewer. And then the third is, of course, offensive, finding signals in the markets, trying to be smarter in the way that you're driving investment decisions or trading decisions. And so I think all three of those parts of the industry are being, our AI is becoming a significant part of the future of the business. And they're investing in AI in all three areas. So I think there's, on the know your client, anti-money laundering, loan origination area, it's very clear that you can use machine learning to try to find, again, it's all a matter of looking for, number one, looking for outliers. So in the AML, KYC area, it's all about looking for outlier behavior.
AML is anti-money laundering.
It is. So it's looking for, basically looking for the bad guys, right? Yeah. So, and making sure that you're not doing business with the wrong people. Well, again, it's mountains of data. And today, it's basically case management. So they take the data and they distill it down, and a human is looking and doing a lot of background work on. But imagine every single bank is doing exactly the same thing on that same person, right? So it's a very inefficient part of the industry. So of course, if you're able to automate that more and make the search and the investigation automated, I mean, every financial services company is going to want to do that, but that is going to, has the potential to take out a lot of humans. One of the things to think about it, though, is regulators. Are they going to trust the results that are entirely driven by AI or not? And I think right now they're in the mode of saying, well, you can use it as an enabler, but you still have to have the investigation done by someone who has judgment. And I think that's where I believe that there's always going to be a blend of humans and machines in our industry, whether that's the trading world, the investing world, or in these kind of more, what I would say, back office type of processing. But can you get it so that it's more efficiently done? Can you pool your resources across banks? Can you make it so that there are at least fewer people having to do some of that work? Yes. And so then the question is, what's the obligation that the firms have to try to retrain their teams, try to find other things? Do they then go into the mode? We now have a whole team of people that are doing data science work that are basically training the machines. And you say, well, that's temporary, but actually not really, because there's always going to be something new to train them on. I mean, this business is remarkably fluid in terms of how it operates. And so there's always going to be new things that the machines are going to have to learn to be smarter, because frankly, the guys who are trying to do the wrong thing are pretty creative. So I do think it will always be a balance of man and machine, or humans and machine.
Yeah, I think the good way to think about it is that we should be protecting the workers, not the jobs. And there's a difference between the two. And in this debate, sometimes we conflate the two, and we confuse the work with the workers. As humans, we are very adaptable. Like as history shows, we all started alongside everything else in this universe in a very different state than we are today, because we adapted and our genetic code became better and better, and we will continue to do that. And as an immigrant, I sometimes sound very Pollyannish when I say this, but if you think about immigrants, when you first set foot, like I set foot in this country 29 years ago, and my only instinct was to survive. Okay, I didn't know anything about this country. Like I'd never been on a plane before. I didn't know where I was landing. I had no, the only thing I knew about America was through like John Wayne movies, which is clearly not America of the 90s when I came here. And so first I wanted to survive, and then I started to imagine a future myself. And eventually, I had the courage and the ability to go invent that future for myself. And that's what, as human race, we are trained to do. So if we take on this immigrant mentality and say, look, in this new world of technology innovation, we are all immigrants, right? We are not immigrants physically in this new geography, but in this conceptual world, we are immigrants. Let's take on that mentality, and just as our forefathers have done it for centuries, we will also not just survive, but we will thrive in this new reality.
And when you say protect the workers, not the job, is that suggesting that companies have a responsibility to offer meaningful job retraining when workers are displaced by automation?
No, absolutely. I think it starts at government level to begin with, right? We need to have policies the same way, K through 12 education in this country is free. But we have, in that education, what we have been training our children is, reading, writing, arithmetic, and all the things that we go through the curriculum today. But that curriculum's been going on for decades. So you start at the national level and say, what should the new age curriculum look like? Then when you go into companies, for the longest time, I started my work career in the heartland of America. It used to be an apprenticeship business. You worked in factories, you got trained by other people who were good at it, and then you got paid more, and you became good at it, and you trained other people behind you. Well, then companies should be training us to do similar things and retraining us.
Yeah.
So, my father's generation, you had one profession, one job. Our generation, we have perhaps one or two professions, multiple jobs. Our children's generation is going to have multiple professions, multiple jobs. That's a reality. We can keep fighting that reality, but it's here to stay.
Yeah. Adena, at a company like Nasdaq, where I have to believe most of the jobs at your company are very high skilled, and with the technical complexity of these roles and responsibilities sort of growing exponentially, how do you think about this issue of sort of continuous learning, job retraining, and really creating a ladder of opportunity for people who might not come in at the highest level with a PhD in computer science?
Yeah, no, it's a great question, actually, because it is something that I think as an organization, we're having to shift the way that we look at our workforce. So when I first got to Nasdaq, I was actually the only person who walked in kind of right out of school. Like, we never hired people right out of school. We always hired people into skilled positions where they had mastery in, whether it was market structure or computer science or whatever it was. And we didn't really have a whole program of developing talent from within the organization. Today, that's a huge part of what we're doing. So we have a lot of university programs. We have a whole internship program. We do all sorts of really fun projects over the summer where people have tangible work product at the end of it that we actually then deploy inside our shop. And it's a very different way of bringing in, I would say, deep intelligence and intellectual curiosity and energy and a new way of thinking and working that then you can kind of integrate into the organization, and they develop their mastery by being a part of who we are, and we teach them market structure. I mean, a smart person can learn market structure, but market structure is something that is not, but then they learn, it's an eternal learning curve, so they can then take that through their entire career. So I have to say, it is changing the way that we think about how we develop our workforce and have the skills that we are trying to bring into the company today.
Terrific. Deep, you alluded to it earlier, but which is the fact that SoftBank is taking AI quite seriously. And Masa-san, the man who has created this amazing force that is SoftBank and the Vision Fund, said he is, quote, devoting 90% of his time and brain to the scientific field of artificial intelligence. And he's talked about his belief that the singularity, the point where artificial intelligence finally surpasses that of humans, is coming. Now, this seems to be informing some of the pretty diverse and big bets that the Vision Fund is making, including Boston Dynamics. You acquired Boston Dynamics, the robotics company, that was discarded by Google. And I think it raises the question for someone, we see so many investments coming out of the Vision Fund, is this a grand strategy to all this, or is this just a land grab for technologies that seem somehow loosely connected?
So you want my unified theory of the universe?
The unified theory of the artificial intelligence universe, please.
Yeah, look, a lot of things are super connected, and clearly as a company that has Asian roots, we believe in community, and we believe in the notion of a family. We talk about our portfolio companies as being part of the SoftBank family. A simple way to explain it, let's just take transportation and logistics. We have a mapping company, Mapbox. We have autonomous driving company, and GM Cruise. Investments in these companies, obviously, we are minority stakeholders. We own, stakes in ride-sharing companies around the world. Uber, Ola, Didi, Grab, etc. We also own stakes in companies that resell vehicles, Auto1 and Fair. So if you think about it, that's a life cycle of the transportation and logistics business. Similarly, if you look at something like robotics, Boston Robotics, Mark Rybert has been a dominant force in robotics for like decades. I applied to the CMU graduate school to study robotics while he was still a graduate student there. And we've known him and his work for a really long time. And if you've never seen you should check out YouTube videos of Boston Dynamics. They are absolutely fabulous in terms of what they have built and some of the fundamental challenges of robotics that
these are the Terminator robots that do backflips.
Oh, they are amazing.
Aren't they?
Yes, they really are incredible.
And if you interact with them,
they can, unbelievable.
They can come hold a can of Coke. They can give it to you. They open doors. They can go upstairs. I can geek out on it all day, but perception, computer vision, robotics, flexible arms, path planning, machine learning, I mean, every field that has been so hard over decades, they've solved so many important and critical problems in that field. We have a company called Brain that has a big contract with Walmart, and they help clean all their stores at night by doing path planning using robots, and they still employ humans to do it. We have Pepper, which is the previous speaker was talking about robots without a heart. Pepper was built to be the emotional robot, like to have emotion and and work with the older population in Japan and also in stores as greeter and so on. And so Masa has always had a big thesis around robotics. Now with the advent of AI, all of those things come together, and then many of the components of these companies and what they are doing can be enabling technologies in other places. So imagine our ride-hailing companies building autonomous vehicle stuff. Well, one of the key things you need to do there is perception and computer vision. Well, they could very well be collaborating with Boston Dynamics and Brain and other companies to try and bring it all together. So what we are trying to do is, it's like having an interesting dinner party. You try to bring the right sets of people together at the dinner table. You serve great food, great wine, which Masa is famous for, by the way, and then let the conversation flow and magic happens.
It sounds like a dinner party I wouldn't mind attending, but is it a profitable one? I mean, is this something that is going to pay dividends for your LPs in the near to medium term? Because a lot of these, I mean, it's very cool, but Google seems to not have been able to figure out how to make money off Boston Dynamics. Are you to suggest that this is very patient capital and in 100 years, maybe you'll see a return? Or do you believe that you'll be able to put all this together and make something that you can really bring to market, for example?
I mean, one of the things that absolutely resonates with the companies we partner with is the fact that we are super patient capital. We invested in Alibaba 17 or 18 years ago, and we've barely taken any money out. And we are the largest shareholder.
How'd that do for you?
It pays the bills. It pays for the wine.
I'd say so, yeah. Adena, when you think about your role overseeing the exchange at Nasdaq, how are the markets valuing this new breed of AI and machine learning tech companies? We're starting to see them potentially be ready to come out and come to market. But I got to believe that investors are going to be careful because a lot of this technology is perhaps still speculative. What are they looking for when they make their assessment of how to value these companies?
Well, I think that the most important thing that you have to start with is, do they understand the technology? And it's hard to understand this technology when it's purely theoretical. And so you have to think about also investors are going to have a time horizon that's more like, if you're lucky, 5 years, other than patient capital providers. But a lot of public investors have to look at things in the scope of maybe 5 and sometimes 10. And they have to look at that and say, okay, well, theory has to turn into practice. They then need to kind of be able to tangibly understand it, be a layman and understand that practice. And then they have to be able to show, the company needs to show how that practice is being applied. And I think I've met a few companies where they have generalized machine learning capabilities. So they know how to teach a machine to do something new. Then the question is, have they been able to apply that in a way that is going to be profitable for them? So in this particular company I met, they've had 2 significant contracts. One is in a manufacturing company where they've actually made the physical robots much more agile. That's kind of the big thing that they've created. So they don't create the robots, but they make the robots more agile. And that's obviously going to be a really great application. You can imagine the TAM on that, right? The total market opportunity. Then on the other side, they're working with some autonomous car companies, or one company on an autonomous car capability. And so again, you can imagine that there's a very big total market opportunity. And again, they're not having to build the physical machine. They're having to basically make the machine smart. Yeah. So that's the kind of thing where an investor will say, that's number one, I understand the theory because they've been able to put it into practice. They are now applying it into contracts that are profitable, and they have very large total market opportunity if they can scale it.
Yeah.
And that's the kind of thing that they'll say, that's a really great investment. But those are the types of things that they're going to look for, as opposed to a lot of theory that they can't quite understand.
Yeah. When we think about valuations, and particularly high valuations when it comes to SoftBank and the Vision Fund, it's hard not to think of WeWork. $47 billion at the most recent valuation. And the narrative, and I know Miguel and Adam well, I've written about them a lot, is that they are not just a real estate play, but they are a tech company. Can you explain to us when, to the outside, it looks like they're essentially in the business of releasing commercial real estate, why WeWork is in fact a tech company that could support a $47 billion valuation?
So, I focus on partnering with entrepreneurs on value creation. The market decides what the valuation is. So, there are smarter people in the room.
You do. I mean, but SoftBank does when it invests at a certain valuation.
Yeah, but let me tell you conceptually, how we think about our investment strategy at SoftBank, and I think that will provide the context for investments such as WeWork. So on one hand, SoftBank has been around for 30+ years, and we've been investing in TMT, and that's a very core pillar. We understand it. It's where investments such as Alibaba and Yahoo back in the day have come from, and that has served us very well. And owning telcos such as SoftBank Telecom, et cetera. The second pillar of a strategy are things around frontier technologies, which is what I help lead at the firm. So this is AI, IoT, genomics, all the cool things that engineers like me love and geek out on, and I can partner with other like-minded entrepreneurs around the world. The third category, and this is why the size of a fund is also so important, is there are trillion-dollar categories in the world that have not seen new age technology because you need very strong balance sheets to disrupt it. If you want to take on a bank with a $1 trillion balance sheet with new age financial technology, well, you can't do it with $100 million in capital. There's no one's going to keep you there. Like, you can't even get all your regulatory approvals in the $100 million. But if SoftBank can come in and give you that capital of $1 billion to $10 billion if required, if you want to disrupt the logistics chain like the car sharing companies are doing, if you want to disrupt real estate, which is trillions of dollars around the world, and that's why we invested not just in WeWork, but also Katera and Compass and other companies in that space. That is the thesis behind it. And what all these companies, they're using new age technology. If you go walk into WeWork headquarters and they give you a tour of all the things they are doing, I mean, simple things. No one, like anyone here, first shot in your companies, if you try to book a conference room, how many of you get the first conference room you try to get? Like nobody, right? But then you walk around on the floor and the conference rooms are empty. You're like, WTF, like who is hoarding these conference room space?
I would pay $47 billion just for that.
And therein lies the thing, which is we worry about value creation with the entrepreneur, and you set the valuation.
Does that jibe with what you hear from investors who are trading on the Nasdaq?
In terms of, sorry.
Well, do you think
Adena's thinking about conference rooms right now.
Will investors accept that sort of rationale? I mean, if we were to come to market at a $47 billion valuation and hear that this kind of rationale.
I think that investors understand that in technology, companies that are core technology companies that are enabling what I would say the mainstream economy to work, they do recognize that as being a technology company, or at least a technology-driven company, right? A technology innovator in potentially a more mainstream economy business. And I think that they will buy into that if they understand how it can scale. I mean, I think the big thing about these businesses, and you see it, is ultimately how do you get to scale? And I think that is a big part of the thesis that you have to at least understand, that the people who are leading these businesses have to be able to talk about in terms of what this means in terms of getting to scale, and how also what moat that they can put around their value proposition. So how lasting is the moat? Because frankly, as you gather more and more data, and I won't necessarily use WeWork, but as these companies grab, let's say they get to really big scale in terms of share, then they have a level of data that no one else has, that they can then make it so that workspace or that car, the decision of where the car is and its position to take the driver somewhere or whatever it is, they can be much smarter about it, and they can deliver a better client experience around it that no one else can do. And that moat becomes what the investors buy into.
Yeah, it's the network effect of data,
Yeah.
right? And look, I had the privilege of being an early employee at both Google and LinkedIn. And like any business school graduate, I built spreadsheets on what I thought the ultimate value of my stock options would be. And thankfully, I was off by 2 zeros in both cases. Okay? And I went to a pretty good business school that taught me how to do valuations. Like, it's super. When real network effects and value creation takes hold, I think our imagination always falls short.
Mm-hmm. We're going to have time for one question, but I've got one final one for Deep. So maybe someone can raise a hand and a mic runner will come. Deep, we just heard from Dove about the importance of values and ethics in business today. It's been a theme of the last 2 days here. Saudi Arabia is the largest investor in the Vision Fund. And we must ask, how did the killing of Jamal Khashoggi change your view on the Saudis' investment in the Vision Fund and your role working with them?
So the killing of the journalist and Khashoggi is a terrible thing. There's no question about it. We've been very public and vocal about it. Masa talked about it at length at our last earnings call. He has personally brought it up at the highest levels, and it's something that people who are responsible for should be held accountable for. There's no question.
Okay, okay. Do we have one question in the audience? Everyone is pretty tuckered out. Deep and